Music streaming service Gavera has put 2 of its subsidiaries into voluntary administration as it tries to restructure the business. The ASX decision to block the proposed float left a big hole in the company's plans. Gavera met with the exchange last week, but the ASX is not for turning. In a statement this morning, Gavera says it'll be concentrating on emerging markets, and Deloitte has been appointed administrator. Small consolation for the investors who put their money in expecting a float. Elise Morgan spoke exclusively to Gavera CEO and co-founder Darren Hurft. And a note, this interview was done before this morning's announcement.
Darren Hurft, thanks very much for your time.
Thank you, Elise.
What's your response to the ASX's decision?
Look, obviously we're very disappointed with the decision. The company spent a lot of time and work, resources getting ready for the IPO, including time spent getting the prospectus through with ASIC, which obviously got the green light there. So to then be blocked by ASX obviously was extremely disappointing for the company, its shareholders, and more importantly the plans as well for the company going forward at this point in time.
What were the reasons the ASX gave?
Look, initially the ASX didn't give any reasons. They used their discretion to block the IPO without providing any commentary or reasons to the company. They were generous enough to offer us a meeting this Tuesday, so we did meet with them and went through some of their matters. None of those matters we believed were matters we couldn't have been addressed if that was shared or communicated with us perhaps 1-2 weeks earlier.
Can you share with us what they were?
Oh, look, just essentially some matters around the financial capacity of the company in regards to the minimum amount being raised, whether that would be sufficient to meet the company's objectives moving forward, the amount of cash. Would it last for what period of time would it last for, and would we need to go back to the market within a 6, 9, 12-month period? Matters that we believe that we'd met and were in the guidelines set out from the ASX in regards to listing. So, yeah, we firmly believe that we'd met the listing criteria, we'd met the scrutiny of the Australian Securities and Investment Commission. So again, yeah, very disappointing from that perspective.
So where to from here? Do you change the company so that you have some decent revenues, so that you reduce your massive debt, so that you become a company that could list?
Yeah, it's a great question, and certainly one that the board have been addressing over the last 4 days. Obviously, we'd been caught by surprise by the decision, as we'd been planning to see the company listed in the next 3 weeks' time. So we need to take stock, and that means we need to assess all parts of our business. Unfortunately, that means maybe some reductions overseas with what we're doing in certain marketplaces, not probably the emerging markets that we are focusing on. So our real sort of future really that we see at this point now is focusing on markets such as India, Indonesia, the Philippines, the UAE, Vietnam, some markets that we are operative in today, growing very quickly in. With India, we now have 6.5 million registered users there, and a great product and a great brand. So that really is the focus. First of all, taking stock and ensuring that financially matters that have to be resolved as a result of this decision are addressed as our first priority, and then secondly, working on our strategy for growth, as you allude to, and certain key markets.
What happens to your 3,000 investors that have already tipped $180 million into the company?
Look, the company is an unlisted public company, so those shareholders have come in over the last 5 or 6 years into the business. Our number one priority to our shareholders is to make sure that that we determine the exact position for the company moving forward, the strategy for the company moving forward now based on what's occurred over the last 7 days. And that we rebuild the business with a real focus on 2 or 3 key markets so that we can actually bring value for our shareholders.
If they want to, can they get out?
Look, the Corporations Act provides that you can't have a selective shareholder buyback, so any share buyback would need to be across the board. The company's not in a position to do that right now. They are entitled to be able to sell their own shares. So obviously being a listed company would have given shareholders the opportunity to have a liquid market for their shares to be sold, which is one of the main reasons you list a business, particularly when you have 3,000 shareholders in a non-public listed company. So yeah, that would have been one of the methods for shareholders to be able to have traded their shares. So again, very disappointing from that perspective. But they certainly are able to still sell their shares if they choose to. but the company can't buy back individual shareholders' shares.
There's been a lot of controversy over the relationship between your private equity fund, AMA, and the accountants who referred investors into Gavera. Were there any kickbacks to the accountants? There's
been no commissions paid to the accountants, so that's under the Corporations Act is prohibited, so that certainly has not been the case. So everything else has been disclosed at our annual general meetings and also in our annual reports each year for the last 7 years. Signed off, fully audited accounts. So all of that has been fully disclosed, and both shareholders and other people have been aware of that.
And the $14 million in fees paid by Gavera to AMA, how do you justify that expense?
Yeah, look, it's a cost that essentially was really a comparison to other private equity venture capital companies that Gavera had engaged or were looking to engage probably 7 years ago. So it was taken on an arm's length market basis. And more importantly, AMA was not paid any fees at all other than when the company was able to assist with Gavera with real capital coming in. So there were no monthly fees, no fixed costs, no out-of-pocket expenses. It was just purely based on the ability to bring capital to this startup company. And when AMA was able to do that, then AMA was paid accordingly for success, and there was no risk to Gavera from that perspective under that business model. So yeah, probably a very responsible method from that perspective.
You're meeting with shareholders at the moment. Now surely they're not happy with what's gone on.
Clearly shareholders would have been far happier to see the company listed on the Australian Stock Exchange, and that had been our core path that we'd taken. And I know that shareholders are bitterly disappointed with the decision of the ASX to prohibit the company from trading and giving shareholders that opportunity to have their shares traded. Also considering again that we'd met all the criteria of ASIC.
But you only met that criteria once you'd changed your
prospectus.
Yes,
that's correct, yes.
On that, the biggest issue for the float was of course the valuation. How did you justify the $1 billion valuation when there hasn't been any profits yet, and you've still got a relatively small amount of subscribers for the amount of time and the amount of markets that you've been targeting?
There's probably two ways of answering that. Firstly, from an ASX perspective, the profitability test is being met from a listing point of view, and as you probably are aware, I understand there are 1,700 companies listed on the Australian Stock Exchange today, of which 1,200 don't make a profit.
A lot of those, though, are mining exploration companies, and a lot of people go into that knowing exactly the risks there.
There's a whole range of companies that are listed on the Australian Stock Exchange, but for 70% to be not making profit suggests that Gavera is not alone from that perspective. However, Gavera is a far different business model, one that requires a significant capital investment into. There are only a handful of global music companies with digital music streaming rights. None of those companies have spent less than Gavera to establish themselves. So comparative to the marketplace and the 4 or 5 key global players, whether it be an Apple or Spotify, Deezer, none of those companies have spent less investing in building the platform for their business. So it's just required if you want to be in this industry.
I mean, you've said you've got a pretty good sign up in India and some of the markets around the world.
Yes.
Is your platform not built enough? What do you need the more capital for? Because, I mean, for example, Spotify had 20 million registered users within 6 years. You're well below that and far behind that.
Yeah, look, there are 6 billion people, obviously, plus in the world today, and there's a huge percentage of those that have access to digital mobile content or web content, and that number's growing significantly. In India, Modi's just come out saying that it'll be a 40% growth this year in access to mobile usage. So the number that you've referred to there from one of our competitors, we think is, it's a great result that they have, but it's a very small percentage of people that are actually accessing music.
So what do you need to spend money on then? If you already have this platform that's built and it's got users in India, what do you need more money to spend on?
The money is the growth of both users, but more importantly, the growth of brands bringing brands onto the Gavera platform. It's the only platform in the world where a brand can set up their very own music channel. That's what Gavera is. It's a platform for brands to be able to engage with consumers through music. And at the same time, it counters piracy, where such a huge volume of people are accessing music today and not paying for it. Gavera brings a business model that allows consumers to get access to music the way they want that, to do that in a legitimate and legal manner, and to reward music artists and music labels for doing that. And that's a whole unique piece of content that we've built and patents that wrap around that.
But do you need more money to do that, or do you just need people to come onto the platform if they like it?
It's a mixture. So certainly we do need capital to be able to invest now in our sales and operative team to take the platform out on a global basis, in particular into some of the key emerging markets such as India, Indonesia, the Philippines, Vietnam, etc. So a lot of the work to actually build the platform, the patents, the licenses, the technology, the cloud technology, that's been done. So we've invested heavily into that over the last 5 years. Now the company's ready to move forward and to go out and bring brands on, and we're doing that with very credible global brands now that are on the platform today.
Will you try and list again on the ASX?
I don't think we will try and list again on the ASX.
Will you try and list anywhere?
Look, our key focus right now is making sure that we get through this next short-term period of time based on decisions being made, then to build the company quickly, and then review our options for potential listing, and probably, by the look of things, that overseas will be our focus.
Darren Herft, thanks for your time.
Thank you, Elise. It's a pleasure.